Hello everyone. Good evening to all. Welcome you all in this session. I hope every one of you is fine. So today we are starting our next module, that is the last module of paper ABM module D. So the mini marathon of paper ABM of module D. So in this mini marathon we're going to discuss about 25 questions. Okay, and in those 25 questions we'll revise our concept. So with the help of MCQs, with the help of some previous year questions, we will do the revision of our all important and relevant concepts. Okay, just once please confirm me if everything is okay. Should I start the session? Okay, I hope everything is good. Now, so let's start the session. So what you have to do, you have to read the question properly and answer the question in the comment section box. But don't forget to mention the question number before answering any of the questions. So let's start the session. So today we'll do the revision of all important concepts with the help of questions. And how you can download your YouTube class session PDF. So for that, you have to download your Oliveboard app. After downloading, if you will open your Oliveboard app, you will see the different tabs over here. Click on the courses tab and you would be able to find all your YouTube sessions PDF. So you all can download the PDFs. Now, the first question. So this is the question. It's four options. You have to read the question properly. I will give you 5 seconds for every question and then I'll tell you the answer. What is compliance risk? So compliance risk is the risk of legal or regulatory action, material financial loss, loss of reputation to bank, and as a result of comply with laws. See, compliance risk is a type of risk that can happen if anyone has not followed the compliances of your bank, if RBI regulations are not followed properly, if there is negative publicity of your bank, if there is any kind of financial loss to your bank, if the fraudulent activities conducted. So all these will this will bring the risk to your bank, and that risk is called compliance risk. Now, according to which association or which board this definition is given? So who has given this definition? This definition has been given by BCBS, Basel Committee on Banking Supervision, Financial Stability Board, IMF, or World Bank. So those who have already read this chapter properly, so they know it very well that BCBS has given this definition related to compliance risk. Now, so answer A. Now, next question. Question is on Chief Compliance Officer. CCO is what? Chief Compliance Officer. Now, must not hold positions like head of credit, relationship manager, head of business development. Why? Because these directly bring the conflict of interest to the company. Now, there is one function that the CC or the Chief Compliance Officer can perform without any kind of conflict of interest. Now, you have to find which position can CCO hold. Head of credit, relationship manager, AML officer, head of business development, member of business sanction committee, or member of board purchase committee. So CCO can perform the role of anti-money laundering officer without any kind of no conflict of interest. Now, so that is called what? Dual hatting. Dual hatting is what? Like in on one person, we cannot give two tasks at the same time. If the person is handling their own department, then that person is not given the work of any other department. So there should be not any dual hatting. Dual hatting, dual means what? It means two. And hatting means what? Hatting means you don't have to give two hats at the same time. Means two workload at the same time. So CCO shall not be given any responsibility which brings what conflict of interest to the company, especially the role when it is related to your business. Now, so roles which do not attract a direct conflict of interest are what are those roles? Those are your anti-money laundering officer. So CCO can perform the anti-money laundering officer without any conflict of interest. Whereas if there is any conflict of interest, if the CCO shall not be a member of any committee which brings a conflict of interest, but if that CCO is a member of the committee, then the CCO can only give the advisory roles or suggestive roles. CCO can only provide the suggestions, can only give advices, but not beyond that. So according to this question, answer C is the correct. Option C is the correct answer. Now, question number 3. Two statements are given, statement 1 and 2. Now, again the C. The topic Chief Compliance Officer is very important topic. And definitely you will going to see 2-3 questions related to this single topic. Now, the minimum fixed tenure for Chief Compliance Officer is 3 years. The CCO can be removed or transferred before completion of tenure only in exceptional circumstances. So what the question is saying, statement first, it is saying that the Chief Compliance Officer tenure should not be less than 3 years. Yes, this is correct. Now, second statement, it says that any CCO can be removed, can be transferred, can get promoted before the completion of the normal tenure only in certain cases, only in exceptional cases, and in that exceptional cases, the approval of board is mandatory. So when the board approves that yes, this CCO can be removed or transferred before 3 years, then it can happen. So this both of the statements are correct. So both statements are correct. Now, so if you see this statement, tenure for appointment of CCO is what CCO shall be appointed for a minimum fixed tenure of not less than 3 years. And transfer removal of CCO is what the CCO may be transferred, removed before completion of tenure only in exceptional cases. And that too, the approval is mandatory. The board approval is mandatory. So option C is the correct answer. Now we have certain roles and responsibilities of Chief Compliance Officer, that what is the tenure period, not less than 3 years. Then transfer removal we have done. Eligibility criteria is the Chief Compliance Officer should be a senior executive of a bank, preferably in the rank of a not below to 2 levels. Not below 2 levels means from the CEO. So if CEO is there, 1 level below, 2nd level below, but not 3rd level. So at this position, CCO cannot be appointed. Now age, it should be not more than 55 years. Then experience, so the Chief Compliance Officer is working at the high post, so he should have an overall experience of at least 15 years. And in this 15 years, minimum 5 years experience should be in the field of all these audit, compliance, legal. Minimum 5 years. Now, what are the skills? So skills so that they can handle any task of the company. They can better check that who is following the compliances or not. If anyone has done the breach of the compliance, then what to do, what action should be taken, how to report to the RBI. So these are the skills that person should have. And next we have some selection process. So CCO shall be done on the basis of well-defined selection process and on the recommendation of the senior executive level selection committee. So when this committee has recommended that yes, the CC officer can be appointed, then now reporting line, reporting requirements are what? What are the reporting requirements? If any CCO is transferring, if there is any removal of CCO, so a prior intimation is provided. Prior intimation is given to whom? To the Department of Supervision, to the RBI Head Office Mumbai before any appointment, the premature or transfer of Chief Compliance Officer. Now, reporting line is what? If any breaches has done or if any non-compliance has been occurred in the bank, now that Chief Compliance Officer will report directly to the MD and CEO. And in the case when Chief Compliance Officer is reporting to the MD and CEO without the presence of the senior management, so they have to conduct a one-to-one meeting quarterly. Okay, so audit committee of the board will conduct a one-to-one meeting with the CCO quarterly without the presence of senior management. And authority is because Chief Compliance Officer is appointed to check the non-compliances of the bank. So all the access, all the information, everything should be provided to that Chief Compliance Officer. So he can communicate with any staff member and have access to all records or files. So these are what? These are the some roles and responsibilities of CCO and very, very important. Okay, so from this question number 3, option A is the correct answer. Now, next question, question number 4. Which of the following best defines the primary objective of risk-based internal audit? Now, RBIE, risk-based internal audit. So what is the work of risk-based internal audit? So, see, it's not the duty of the company to check, to do the regular inspection of only the books of account, but as well as to to do the regular analysis of risk in the bank. So risk-based internal audit is to verify, assess different kinds of risk which are happening, which are coming to the bank, or how people are mitigating those risks, what assessment they have used, what 3 types of factors, parameters it is connected with the risk, that is identification, then assessment and mitigation. So that is risk-based internal audit. So it provides assurance that risk management processes are effective and our risks are managed within the bank internal department risk appetite. So option C is the correct answer. So answer C, option C is the correct answer. What is that? So Institute of Internal Auditors defines RBIA as a method that connects internal auditing with the risk. So you don't only have to check or you don't have to do only auditing in the company, but you also have to analyze, you also have to check risk associated with that to an organization's overall risk management framework so that you can minimize the risk. You can use different methods to mitigate the risk. So it says RBIA is not about auditing the risk, but it is about the managing the risk. See, we cannot audit the risk. We know that okay, these are the different types of risk which are associated in our bank. Now, in bank, what are the types of risk? You have compliance risk, okay. Then you have interest risk, you have exchange risk, then currency risk, then inflation risk. So these are all different risks that are directly connected to your bank. Now, audit is what? To check the risk, to analyze the risk, and to take effective measures. But managing the risk means what? You have to first identify the risk, then you will assess the risk, which risks are more harmful to your bank. First, you will mitigate those risks, then you will mitigate the other types of risk. So that is not only the auditing risk, but also managing the risk. All right. Yes, if answer, good evening. I'm good. Now, so option C is the correct answer of question number 4. Now, next question number 5, the head of internal audit. So a large public sector bank is reviewing what its internal audit function. And for that, HIA is appointed, okay, to prepare the audit plan. HIA consult the audit plan with the senior management and the board of directors so that a robust risk assessment management should be done. Ensure the plan that every plan is covering your high risk areas and also matching with the bank's objectives. Then head of internal audit, he also ensures that the audit teams are receiving ongoing training and they are following the compliances, all the regulatory requirements are done properly. The audit plan is then submitted to ACB audit committee of the board. HIA is responsible for ensuring the department is connected with the international auditing standards. They have done all the they have done all the things related to their standards, to the benchmarks which the company has already set. Now, so these are the work of head of internal audit. Now, question starts from here. Which of the following statements best describes the responsibilities and reporting structure of head of internal audit in this scenario. So head of internal audit, what he's the chief auditor of an organization. Now the head of internal audit job is to independently check whether the company is following rules, laws, internal policies or not. And after that, whatever reports are being made, they usually report it to the audit committee of the board, not just the management, so that they remain independent and unbiased towards the company. Now, so what are the roles and responsibilities of this head of internal audit? Tell me. Four options are given to you. Which option is correct? See, what option D says the HIA is responsible for hiring audit staff, conducting marketing reviews, reporting only to branch managers or ACB, audit committee board. And the head of internal audit, it is not responsible for hiring the audit staff and conducting the marketing reviews. Its main work is to check the risk associated with the company, okay, all the internal checks, internal controls, then whether the plans are made according to the strategies or not. Then HIA main role is to prepare financial statements, manage external audit, reporting to marketing department, not only external but also internal. Now, HIA is responsible only for operational management, not only. So again, I'm telling you, whenever in any, if you're doing any question, if you see in the options, the few only such type of words, if you see in any option, then read that option twice or thrice. So 99% chance is that that option would be always incorrect. Now, so head of internal audit is responsible for independently evaluating internal controls, yes. Risk management, yes. Ensuring audit team competence, yes. Preparing a robust mechanism, risk audit plan, yes. So these are related to your HIA. So we can say that option A is the correct answer. Now, next question number 6. And if you are watching this session for the very first time, I highly request you to please subscribe the channel. And if you feel that these questions are helpful to you, then you can hit the like button also. Now, statement 1 and statement 2 statements are given. So what it says, the CCO act as a nodal point of contact between bank and regulatory authorities. Yes, if any department or in any head, the CCO has checked that the non-compliance is there, breaches are there, they are not following the the requirements. So the CCO has to report to the regulatory authorities, the RBI. Yes, this is correct. They act between the bank and regulatory authorities. Now, the CCO is not required to interact with RBI or other regulators. See, if you will see both the statements, if you even don't know the answer of this statement, you can, if you are understanding the what the statement says, then you can conclude that both the statements they are contradicting each other. These statements are contradicting. Now, in one statement, it says that the CCO has the connection between the bank and regulatory authority. And here in statement 2, it says the CCO does not have any connection with RBI. So either one will be true or second statement will be true. So we have learned that CCO, it acts as the intermediary or mediator between the banks and regulatory authority. So statement 1 is correct and 2 is incorrect. Okay, so this now next question number 7. So under the Companies Act 2013, which companies are mandated to establish a vigil mechanism related to whistleblower? So who is a whistleblower? Whistleblower is a person who always checks that if any non-compliance is there, if any breaches is there, okay, any fraudulent activities are there, any suspicious activities are there, so they can directly report it to the top management. Now, which companies have mandatorily they have to appoint, they have to follow whistleblower mechanism? So every listed company is there. Companies who accept deposits from public and company who borrows from any bank or financial institution 50 crore or more than that. So A, C and D. So option 4 is the correct answer. This is no paid up capital such like that. So draft rule 2.5, it says of the Companies Act and under section 177 subsection 9, it makes it compulsory for the listed company, companies who accept deposit from public and companies who borrow more than 50 crore from bank, they have to maintain whistleblower, they have to follow whistleblower policy in their company. Now, so what is whistleblower policy? Whistleblowing policy means a company gives freedom to their employees to tell the management if any suspicious, illegal, or unethical act is conducted in the bank. Then whistleblower mechanism has to be applied over there. Now, so it can be in bank also, it can be in any company also. What are the objectives of whistleblower? It gives employees, investors, contractors the right so that they can raise their concern against wrongdoing done by any employee or any company to protect the employees against retaliation. So what happens? Suppose you all are working in bank. Okay, you have a group and you have done any kind of illegal work. The work which is not illegally, you have not abided legally, it's illegal in time. Now, suppose this person has seen that, okay, you have done such kind of act. Now, if this person directly go and complain to the top manager, so in this case, what will happen? You will see that this person has complained. Now, you will always try to, uh, you can say, always try to uh, you will always try to do the retaliation to this person. So what it says that to protect the employees against any kind of retaliation due to whistleblowing policy, so that you cannot take any kind of revenge, that is why the company protects whistleblower. Okay, done. Now, so companies committed for doing business in ethical ways, and if anyone has seen that unethical transactions are there, fraudulent activities are conducted over there, any unethical or dangerous act is there in the company, so they can directly report it to the manager. Now, whistleblowing policy is crucial policy which gives stakeholders the liberty to raise concern against any illegal activity, and employees of the company can report any concern operated under the audit committee. So these are the certain things which are related to whistleblower policy. Now, one thing was again, okay, so let's do question number 8, which is not true about whistleblower policy. It should provide for direct access to the audit committee. Yes, the whistleblower policy, it says that the company has to always maintain confidentiality of the complainant. Yes, the whistleblower policy who act as whistleblower does not, the company should not disclose the name of that person, name of the whistleblower. Yes, it should provide safeguards against victimization. Yes, this is also correct. But it should not guarantee monetary rewards for disclosure. So company does not say that if you will become the whistleblower of my company, so definitely I will give you the reward for complaining me, for checking non-compliances, for fraudulent activity. So company never says this. If company want, if bank want, they can reward the whistleblower, but it is not mandatory. So it should guarantee monetary rewards? No, not always. Option A, B, D, and correct, and C is not correct. So reward is not mandatory, though some companies they voluntarily they offer it, but it is not mandatory that every company has to give reward to whistleblower. Now, next question related to again head of internal audit HIA. So HIA, RBIA, CCO, whistleblower policy, then different type of risk, then types of fraud, vigilance mechanism. So these are very important topics. NBFC, the layers of NBFC, transition plan, very important topic. All the topics are important from your module D. Now, so bank's audit committee is concerned about compliance with new regulatory guidelines and effectiveness of internal control across its subsidiaries also, not their own company, but its subsidiaries. Now, HIA is asked to produce an evidence-based annual internal opinion, and the HIA is also expected to continue with all the things with internal and their external stakeholders, including their regulators, external auditors. Now, according to the statement, according to this case study, which one of the following is not an appropriate responsibility of head of internal audit? You have to tell me which is not the work of HIA. So HIA reviews the adequacy of risk management. Yes, they check internal control. They provide assurance to the audit committee. Yes, this is also correct. Now, preparing the annual governance report for the board, including setting the bank's business strategy. No, this is not the work of head of internal audit. This is the work of their risk managers. Their the one who formulates the plan, makes strategies. The manager has this work. HIA does not do this work. So option C is the correct answer. Clear? Now, next question number 10. Which aspect of internal control ensures integrity, security, and privacy of data? So in internal control, there are six elements are there. So six elements of internal control are there. Now, what are those six elements? So six aspects of internal controls. Internal controls are what? These play an important role to check the compliances in the internal system. And they check that they also make the safeguards. They also ensure a risk plan, the robust mechanism so that they can see if there should not any kind of malfunctioning errors or fraudulent activity conducted in bank. So for that, six aspect of internal controls are what? First is information system, that is your IS. So it is ensured that the integrity and security is maintained. The all the data of the customers, the employees are to be kept separately. All the details, the information, the important information should be kept confidential. The system should work properly. The security should be there. Then segregation of duties means that everyone in the bank, they should know their role and responsibility well. They are expertise in their own area, so they can perform their work well. Audit program. So every time to time, we have to conduct the audit of our company so that we can also know that what our financial statements say. So bank's audit program in determining compliance with the policy. Then to keep the records, books of every bank should be kept in accordance. Protection of all the physical assets. So the cash, the physical assets, the machines, the systems, the uh, your or all other by authorized personnel. So all the assets, the you should not give control of your assets to every person. Rather, only the control should be given only to the limited person to whom you can trust the most. So principal method of safeguarding asset is to limit access by authorized person and education of staff. So you should have the staff a skilled staff in your bank who can handle any task. They should be thoroughly trained in their specific departments, in their specific field. So these are the six aspects of internal control. Now, what the question says that which aspect of internal control ensures integrity, security, and privacy? So that is information system. Now, question number 11. The requirement that books of every bank should be kept in accordance with accounting principles, that every company they should follow the standards, the principles, and they should maintain their books of account in accordance to those principles. Now, which aspect of internal control say this? That is record keeping. Done. Now, next question number 12. As per RBI guidelines, the CCO may be invited to attend meetings of which committee to provide the compliance, to give the inputs on compliance risk associated with their new product and services. So for this, you have answer in the question only, that is product approval committee. Now, in product approval committee, the CCO is invited. They attend the meetings, okay, and in that meeting, they will give the suggestion regarding product, regarding how to make the product, when to launch the product, what are the risks associated with that product, the risk factor is high or low, what are the compliance risk related with that product and services. That is in product approval committee. So this product group committee. Now, question number 30. So compliance risk, just now we have studied what is compliance risk. So it is the risk of legal, regulatory, financial loss, reputation, negative publicity is there. That is your loss to reputation of bank. So yes, this is your compliance risk. Now, statement 2, it says compliance risk is only concerned with operational and does not include regulatory breaches. No, it includes regulatory breaches as well. So statement 2 is wrong and statement 1 is correct. Option C. Now, this is the one case study is given to you. You have to read this case study and you have to tell the answer of question number 14. What does the case study say? Now, a compliance audit was conducted at XYZ Bank. Yeah, now, okay, after the compliance audit was conducted, certain factors were seen. Now, what were those? Delayed reporting is there. This was because of suspicious transactions. Minor breaches were there with respect to KYC procedures. Now, trainings were not completed. Incomplete trainings were there. No major fraud or violations were observed. But in this company, no major frauds and violations were observed. Only three things are very bad in this company. That is delayed reporting, minor breaches, and some mandatory trainings were incomplete. So based on such findings, what is the compliance risk score? That is 6.2. Now you have to tell me that this 6.2, this factor, this parameter, this criteria comes under which type of score framework? Under the framework, risk score framework. So well controlled, meets requirement, needs improvement, or needs significant improvement. So it is 6.2. So it is needs improvement. See, if you will see that 1 to 3, it is well controlled. 3.1 to 5, it meets requirement if your risk level lies between 3.1 to 5. If it is 5.1 to 7, you need to improve very much in your company, in your bank. And 7.1 to 10, it means the bank is not following any compliances. They need to improvise, they need to improve very much in themselves. So it is 6.2. So 6.2 comes between 5.1 to 7. So it needs improvement. That is option number C. Now, next question number 15. So which of the following is most appropriate of operational risk? So operational risk is what? What is the operational risk? So when your operation is not, when your system is not working properly, when the core business activities are not happening properly, so it is losses due to fire destroying the main data. When your main data is lost, disrupting the banking operations, when your internal system, when your technology has completely collapsed, that is a type of operational risk. So we have some different types of inherent risk. Credit risk arises when the borrower has done the default, when the due date arrives, when on the repayment date, borrower is not in a position to repay your loan, then the credit risk arises. Now, market risk is the risk due to the movements in the market fluctuations, that is interest rate, foreign currency rate, then stock prices. So if there is too much market fluctuation, then market risk arises. Now, liquidity risk is a risk when you don't have enough, you have liquid assets, but those liquid assets are not completely converted into cash quickly. So therefore, they have to pay high interest rates to bridge the gap. So liquidity risk, financial institution may run short of their funds, owning a decline in its credit worthiness. Operational, when your customer is, your employees are not well trained enough to handle the customers, then any unethical conduct is there, your system is not working properly, the connectivity issue is there, then operational risk. And system risk is that is the malfunctioning and unethical conduct. Now, one very important information that we are launching the crash plus cracker batch, that is all in one combo. So in this combo, you will get the benefit of crash batch also and cracker batch also. Now, what is the difference between crash and cracker batch? So in crash batch, we will do the revision of all important and relevant concepts and the from where the questions are repeatedly coming in exam, that is the crash batch. And in cracker batch, the concepts, the topics which we have revised in our crash batch, we will do MCQs and previous year questions in our cracker batch. So you will, if you are enrolling in this particular all in one combo, that is crash and cracker batch, then you will get the benefits of revision plus practice of MCQs, practice of more and more questions, practice of questions. So this complete batch would be in will be provided in English. So every educator, they will give you the questions also, the revision also of all and important concepts. So revision section is there, live practice sections is there, high level MCQs plus case study and plus numerical MCQs also. So every type of questions we're going to do in our cracker batch. Now, question number 16 on GRC framework, the question is, now what is GRC? G stands for governance, R stands for regulatory, and C stands for compliances. That is GRC framework. Now, what GRC framework? G governance, okay. R stands for risk, sorry, R is risk. Wait, let me correct it. Governance, risk, and C stands for compliances. Okay, now, so GRC framework. So GRC is what? Governance, risk, and compliance framework. So it is a structured way for an organization to work safely and responsibly. Now, governance will tell you that how decisions are made and controlled, like policies, the ethics, the accountability. Now, risk will tell you how uncertainties and dangers are well managed by any company. Like we have different types of risk: operational risk, cyber risk, financial risk, regulatory risk. Now, and compliance is what? That is following all rules and regulations, the guidelines of RBI, company law, tax law. So, in short, GRC framework, it ensures that a company is well governed, the company should be aware of all the risks, and the company should be fully compliant with all the rules and regulations. Now, so in what way does an integrated GRC system help organization to respond rapidly with the changing environment? So, see, if you are following the individual governance, risk, and compliance, so you can see that in governance also some part of risk and compliance is included. In risk also some part of governance plus compliance is there. In compliance also some part of governance and risk is there. So in every individual activity, the rest of the activities are included. So sometimes it happens that there is duplication of all the activities. So in order to avoid the duplication, in order to avoid the more time which is taking in these activities, so an integrated version is created. So an online and integrated GRC system is there which can manage all their departments. So the if you want to check anything related to governance, you will check the you will go in the governance department on the website and you can check all the matters related to governance. If you want to check the risk of the ICICI Bank, then you can go to that department, the risk factor, you will check, you will do the assessment, then you will try to mitigate. So you will go in that separate department. So integrated GRC, it helps to avoid the duplication of effort. So what is more appropriate with this integrated GRC system? So by leveraging centralized data, automated monitoring is there, everything is done automatic, no manual functioning is there, real-time reporting, the reports will be provided immediately, and integrated GRC enables organization to quickly identify regulatory changes, assess their impact, minimize the risk, then check the compliances measures. If there is need to improvise, then uh, that accordingly that the mechanism should be taken, improvised mechanism should be taken. The risk of non-compliance and associated penalties. So it is the system which help you to record, which help you to analyze and also give you the real-time reporting so that you can take quick actions for the deviations. Now, question number 70. Which of the following best describe integrated GRC? So by unifying governance, risk management, compliance process, organization gain a holistic view. Holistic means overall approach. Enabling leadership to make more informed, timely, and strategic decisions. Option B is the correct answer. Yeah. So what is governance? Governance is the rules, the policies, the process. Risk is first you will identify the risk, then you will do the assessment of that risk, and ultimately last you will take the mitigation steps. How to mitigate the risk. Now, key elements under governance. So we have goals, roles and responsibilities. It also helps in maintaining transparency and accountability and ethical business conduct. Risk, first risk identification is there, then assessment, then mitigation. Compliance means adhering to all the laws and regulations that the company has, that the regulations are made, the RBI has made. So all the bank has to follow the guidelines. The Companies Act, all the companies they have to follow the guidelines of Companies Act. So it adheres to laws, regulation, and standards. And integration is what? It is a combined framework that links governance, risk, and compliance into one system. Now, question number 18, again on whistleblowing policy. So, what are the key protections that must be provided to whistleblowers under a robust mechanism? Now, whistleblowers should be protected only if the reports are proven to be accurate. No, they will get the protection even if that is not accurate also, but still the protection is provided. Now, whistleblowers must be protected from any form of retaliation. Yes, no one can come and take revenge from those whistleblowers, including dismissal, demotion, harassment. No demotion should be there, no discrimination, no harassment should be there. Their identity and information should not be revealed unless and until whistleblower wants, or unless and until the court says that no, the name has to be revealed. Otherwise, the name has to be kept confidential. Then disclose only to competent authorities if required. No adverse action will be taken against individual who reported any kind of suspicious activities of the company, and even the investigation does not confirm the violation. These are the things that are related to your whistleblower. Now, question number 19. What is expected status of the top layer under SBR framework? Scale-based regulation framework. That is SBR, scale-based regulation framework. Now, so we know that in NBFC there are total 4 layers. Now, what is the mnemonic of this 4 layer? B stands for base, M stands for middle, U stands for upper, and T stands for top layer. Now, so as of now, what is the status of top layer? So in the top layer, only those NBFCs would be kept that are highly regulated, highly risky in nature. But as of now, the top layer is it is vacant. So it is ideally expected to be empty, reserved for NBFCs that may pose extreme systemic risk. Now, with reference to NBFC upper layer transition plan, what is the correct sequence of events in upper layer? So in upper layer, see, whenever any NBFC they move from base layer to middle layer, middle to upper, upper to top, so the risk pattern, the compliances, it becomes very high. In base layer, though the NBFCs uh, they don't have to follow that much compliances, but in middle layer they have to follow more compliances. Then in upper layer, more compliances. So as and when you increase one level up, you have to follow more regulations and more compliances, the rules and regulations of RBI. Now, so in upper layer, if any NBFC there, the transition of NBFC is there to upper layer means the in upper layer means that NBFC is moving from middle to upper layer. Now, if any NBFC it moves from middle to upper layer category, now what are the steps that NBFC has to follow? So, for first step is the RBI will provide the information that now you are working in middle layer, but you have, there is more risk associated with you. So now we have to keep you in the upper layer category. So first RBI will inform to middle layer NBFCs. Then after informing, board will adopt policy within 3 months. So board has to adopt the policy of a transition plan within 3 months. Then RBI gives time to that NBFC can get ready to go in the upper layer category, because in upper layer you have to follow more strictness will be there, more stringent rules and regulations will be there. So RBI will give you time how much? Within 24 months. So full compliance is done within 24 months. And remember, in this 24 months, already the 3 months are included. It is not separate. So 3 months, again 24 months. So it is not like that. In 24 months, the 3 months are included. And then the roadmap is submitted to RBI. So option A is the correct answer. So correct sequence is RBI informs. Once RBI informs an NBFC about its classification as upper layer, then NBFC must prepare to get the board approval. After the board gives approval, then it is the implementation plan is approved and is submitted to RBI, and then RBI will give 24 months time to uh, get ready to go in the upper layer. So that is 3 months, then 24 months, and the period of 3 months provided for charting of the plan. It is already included in this 24 months time period. So 3 months is given for planning and policy ready. 24 months is given to follow the rules of the upper layer and then send a roadmap to RBI. So RBI will check and monitor that yes, is this NBFC working good in upper layer or not. Now, next two questions. So which of the following NBFCs will always be included in the upper layer? So in upper layer, okay, let's first understand all the layers. Now, base layer is what? Base layer comprised of non-deposit taking NBFCs. Their asset size should be less than 100 crore. Non-deposit taking NBFCs whose asset size is less than 1,000 crore. Now, and those NBFCs who are included in these activities in peer-to-peer lending, P2P account aggregator, then financial holding company, and those NBFCs who do not have any direct relation with the customers. So these will be included in the base layer category. Now, what type of NBFCs they are included in middle layer? So all deposit taking NBFCs, irrespective of their size, no matter what their size is, if they are 10 crore, if they are 100 crore, if they are 200 crore, even 20,000 crore, no matter what their asset size is, all deposit taking NBFCs will be kept under middle layer. Now, next is those non-deposit NBFCs whose asset size is more than 100 crore. So why? Because below 100 crore we have seen in our base layer. So whose asset size is 100 crore or more than that, they will come under middle layer. Now, if the question says if the NBFC is having the asset size of 1000 crore, now tell me in which category this would be kept. This would be kept in middle layer category. Why? It says non-deposit taking NBFCs with asset size of 1000 crore and above. So 1000 is also included and above is also included. Now, next NBFC is taking the following activities, the standalone primary dealers. Now, who are standalone primary dealers? So, they are such dealers. They can be any institution, they can be any individual, they can be any financial institution who directly deals in government securities. Directly deals in trading of government securities. In trading of GSEC market, government securities market. So these are primary deals. Now, then infrastructure debt fund, core investment companies, housing finance companies, and infrastructure. So those NBFCs who provide finance for infrastructure, they would be under IFC. Those NBFCs who provide financing related to house finance, the core investment who deal in the actual investment criteria. So these will come under middle layer category. Now, next is upper layer. So upper layer category, because it is right now, it is the highest layer of NBFCs where NBFCs are kept. I'm not talking about the top layer because top layer is empty. So the highest layer where NBFC is actually kept, that is the upper layer. So they have some more stricter regulations also. So upper layer consists of those NBFCs that Reserve Bank of India identifies as needing stricter regulations. So first, top 10 NBFCs would be kept by asset size. So these NBFCs, they have stricter regulation. So now their these NBFCs would be given weightage. Okay, so weightage would be given in numbers and the judgment, expert judgment. So numbers are given 70% and 30% is on judgment. So first, top 10 NBFCs by asset size, they are included in upper layer based on their total assets. Now, how other NBFCs are selected? So RBI has used the scoring system, that is 70% and 30%. So 70% would be given in quantity, that is the numbers are given, and 30% is based on the evaluation of the expert. If the expert says that this NBFC has to be kept in upper layer, then everyone will follow that. Those NBFCs would be kept under upper layer. So RBI uses scoring system that considers both numbers, 70% weight, and expert evaluation, 30% weight. Now, the scoring identifies NBFCs from top 50. So in top 50, the top 10 is not included, excluding top 10. And other additions, that if any NBFC who are already categorized as upper layer in the previous year, so they would be kept in this layer, in this time, in this category also. And if RBI include NBFCs based on any judgment. So these are how the NBFCs are kept. So which of the following NBFC will be included in upper layer? That is top 10 NBFCs by size. Now, 22nd question. The RBI identifies NBFC for the upper layer using a scoring methodology. Now, what is that methodology? 70% numerical parameters and 30% expert judgment. Okay, so these are the answers. Now, okay, let's do till question number 23. Now, so what does the question number 23 says? Three statements are given. First is preventive. Third talks about the detective, and the second statement talks about detective vigilance, and third is punitive vigilance. Now, you have to find which statements are correct. Now, punitive, preventive, detective, and punitive. These three are the vigilance. Now, what is vigilance in bank? So, vigilance in bank, it refers to the process and measures that are taken to prevent any kind of fraud. It also checks the fraud. It also helps in detecting the fraud. And if any misconduct is there, So it also helps in checking that. And these vigilance in bank, it ensures transparency, accountability, and ethical practices. Now, so total we have three types of vigilance. One is preventive, detective, and punitive. Now, preventive means what? You are taking action before something has happened, before like any fraud has happened, and you know that this fraud is prevailing in the market. Okay, many customers have faced such kind of fraud. You are aware of this now, so that in the customers of your bank, okay, they should not face such kind of issues. So you are taking preventive measures so that you can prevent your customers from such kind of fraud. So that is called preventive vigilance. When you are taking preventive measures, that is proactive. So P stands for preventive, P stands for proactive. When you are aware before something is, when you are aware, when you have taken steps to protect your customers, to protect your system, to protect your bank before actual something has happened. So steps taken to stop fraud and misconduct before they happen, like internal controls, audit, employee training. Detective means what? That is already the fraud has place. Now you are identifying that fraud irregularities through monitoring, internal audit, and surveillance. So it is what? It is a type of reactive. It happened after that you are taking the actions. And the third is what? That is punitive vigilance. So punitive means taking disciplinary or legal action against the individuals who are involved in such kind of fraud. So that is preventive, detective, and punitive. Now, so what are the components that are included in the vigilance in bank? So you have to maintain a internal control system so that you can check the fraud, you can prevent fraud. Then whistleblower mechanism. So whistleblower is a person who the top manager, they give the freedom, they give liberty to their employees that if you see any kind of misconduct, any wrongdoing, then you can come and tell me. Fraud risk management, so identifying and mitigating risk, and also checking that the banks, they are following compliances, they are following regulations, rules and regulations of the RBI or not. So these are what? These are the different types of vigilance. Now, what the question says that you have to find the correct statement. Now, statement one says that preventive vigilance is mainly reactive in nature. Now, we have seen that preventive vigilance is what? It is proactive in nature. You take preventive measures before the fraud has taken place. So this statement is wrong. Now, detective vigilance is what? It is proactive, mean to stop frauds before they happen. No, it is reactive. Once the fraud has already taken place, after that you are using, see, after that you are monitoring, you are doing internal audits, so identifying frauds and irregularities. And punitive, it is a corrective and involves punishment after wrongdoing is proved. Yes. So punitive is what? You are taking action against that person who is included, who is involved in such kind of fraud. So statement three is correct. Okay, done. Now let's do one question more related to fraud. Okay, this is one more question. Statement three are given. Now, what it says, preventive vigilance focus on creating system and procedures to avoid misconduct. This says now, detective vigilance, it involves detecting irregularities through audit. Yes, this is also correct. Now, punitive vigilance means taking timely disciplinary action against wrongdoers. Yes. So both all the three statements are correct. It helps in creating systems so that you can prevent the frauds. Detecting means to detect irregularities, and punitive means you are taking action against that person, against that wrongdoer. So all the statements are correct. One, two, three, all three statements are correct. Done. Okay. So uh, these two questions we'll do in our next class, and we have completed 24 questions so far. So all the questions are important. To revise it, I will upload the PDF. Okay, and all the explanation is also provided too. So download the PDF and just go through once. So one again, if you have not yet subscribed to our Super Elite all-in-one plan, do it now if you want to make your preparation best. So this single plan will give you a lot of benefits. The live classes, special sessions will be there, then case study, numerical test, then doubt clearing sessions, everything will be provided to you in this single plan. And this one, don't forget to enroll in this crash and cracker batch. This one. So if you want to prepare, if you want to do quick revision, you can join our crash batch. And in cracker batch, we will be doing MCQs, practice of more and more questions related to the topic which we have already completed in our different batches. Okay, so I hope you have enjoyed the session. And if you feel that sessions are helpful to you, do like the session, share it with others, subscribe the channel if you have not done yet, and comment it if you have any doubt, any queries in your mind. So let's meet you in another session. Till then, take care, everyone. Goodbye. Keep studying, keep watching.